are all in for a treat today. I have the Michael Zuber on the show today, and we are digging into how you can disrupt yourself and build a new stream of revenue, one rental at a time. So, Michael, welcome to the show.
Kelly, thank you for the opportunity. I look forward to this chat.
I'm so happy to have you here. Now, I feel like you were another kind of accidental entrepreneur. So let's talk a little bit about your own story of how you got into this space, how you began down this path. And then we'll dig into, for all of our entrepreneurs that listen to the show, how they can explore whether or not this might be a path that's right for them. So walk us through kind of how you arrived on this journey that you're on.
Yeah, complete accident. My journey actually starts when I'm 30 years old. I just lost 80% of my net worth in the stock market. That was the dot-com crash. If you want to, age me, I am over 50. And I was depressed. I turned, roughly, 7-8 grand into $200,000. I thought I was a genius. I thought I was on the path to financial freedom, and it all disappeared.
Yeah.
And, I'm an employee at this point, right? I have a family and I'm depressed.
Yeah.
And I walk into a bookstore, and if you're in my age group, you find this purple book called Rich Dad, Poor Dad.
Yeah.
And for me, it was an unlock. It brought up ideas I had never thought of. Nobody in my family had thought of. I grew up very much financially stressed. Money was the problem. I thought you were supposed to go to school, which I have an econ degree. I went back to school and got an MBA, and I tried to climb the corporate ladder. And
you checked all the boxes you were supposed to check.
I mean, that's what my parent, that's what my mom specifically said to do. And a couple of things happened on that day when I lost all that money, is I also looked up the org chart and realized that the people above me had a life that I didn't want. There was nothing about their life, Kelly, that was entertaining to me. Yeah, they had the big title, but they were all unhealthy. They all were unhappy. It was just like, what am I doing? Why am I going to do this for another 30 years?
For sure. For sure.
So for me, I decided to buy real estate, one rental at a time. I wanted to buy a rental house. My big vision, Kelly, a lot of entrepreneurs like yourself, you can see the future in technicolor.
Yeah.
I just work, right? I'm I'm going to get one. I'm going to get two.
Yeah.
And the reason I wanted to get a couple was I just wanted a better retirement at 65. And that was my big vision. But, when you get in the game, you're focused, some strange things happen. And the last thing I wanted, when talking to the entrepreneurs, just to highlight, I know that time is your issue, and risk, and, being scared, and all of those things. So my 30-year-old self would work 60 hours a week, not including travel. And travel in my career was significant. I've done a million miles and 100 nights in hotels. I sold enterprise software. So I was all over the world, not the state, not the country, the world. So I didn't have time. I get it. And believe me, I didn't want to make a mistake. I'd already done it once. I didn't feel like I had an opportunity to lose it all again. And I just thought I would buy the boring 3-bedroom, 2-bath, 2-car garage, kind of B-class neighborhood. And if I could get 4 of those, life would be better. So that's who I was. I would save money, disposable income, stack paper, buy assets, and repeat. That's what I did.
Yeah. Okay. And then, so fast forward to today, like what happened?
Well, again, I've been at it for 20 years. So, your time may be different. I retired in 2018. So we had almost 200 units. We've been doing it 18 years at that point. So we one at a time, and then we did some 1031 exchanges. And also, I did this before the crash, right? A lot of people got started in real estate after the crash. We started in 2002, right? So we've seen it all. But we did grow quite significantly, because when you're focused and you're doing it right, you just keep learning, right? That's the big thing. Much like an entrepreneur, you're never done learning. You can always find new opportunities and create value. And it was a fun journey. And now in 2024, I've been out of the game 6 years. I have started this brand called One Rental at a Time, all by accident. We have multiple books, courses, a YouTube channel, all giving. And it's shocking that, we do 7 figures a year and I have no idea what I'm doing. I have no idea what I'm doing. It's just wild. It's crazy.
Welcome to the club. Yeah, exactly.
Well, good. I'm not alone.
Yeah. You're not alone. You're not alone. Okay. So I have so many questions. This is just perfect for our people. I mean, obviously, I think that most entrepreneurs who have successful businesses desire to build a real estate portfolio. That is a consistent desire across most entrepreneurs that I know. And to your point earlier, they're looking for low risk. They're looking for incremental, small windows of time because they're very busy running their main company. And so when you're teaching people how to get started one rental at a time, what is the framework of where you recommend that people get started for that first base hit, let's call it?
Yeah, they're all base hits. They are. One of the things that I really want to highlight here is a lot of entrepreneurs got enticed by syndications, right? There was a vision that, hey, you give me 100 grand, I'm a known entity in this space and I'm going to run off and buy value add apartments. Folks, that's not going to end well. It's just not going to end well. I've been warning people about that for a couple of years. I've seen a lot of people I know, big tech jobs, big stock portfolios, just burn money because they were essentially giving money to some operator who was making fees and just overbuying into a bubble. So they're about to get hurt, which is unfortunate. So what do I recommend? Frankly, it's what I did. I chose a market 2.5 hours away. Why? The numbers made sense. I then spent a couple of months talking to dozens and dozens of people that live in the market, invest in the market about, hey, where's kind of middle Fresno? Fresno is the market I chose. And nobody ever says the same things, but when you talk to 20 people, you get enough overlap. And I'm like, Mayfair District, it's 93703. So what I would tell any entrepreneur to do is you can't cut the line. Everybody's got to do something. But for 3 years, Kelly, I looked at the following criteria: 93703, single family homes, 3 or 4 bedrooms, 2 baths, 2-car garage, between 1,200 and 2,000 square feet.
Okay.
That criteria is super focused. That criteria produced between 15 and 35 active listings. And I looked at it every day. It took 20 minutes. It took 20. That's all you need, 20 minutes.
Okay.
And buy box, which is what I call it, is so powerful for the entrepreneur because you can get good at that criteria. I could never get good at Fresno. Fresno's 1 million people. I don't live there. I've never been there. But you know what? I can learn Mayfair 3 and 4 bedroom houses. And I did that for 3 years. I looked at that criteria and nothing else for 1,000 days in a row. It's that simple.
Now, when you talked about it being 2.5 hours away, how important do you think that it is when you're just getting started to invest in properties that are drivable to you?
For me, it meant everything, but it really was a wrinkle in my character. Earlier, I talked about traveling 1 million miles on airplanes. I hated every mile. I'm a very stressful flyer.
Sure.
But it's how I made money. So I sucked it up for my family.
Yeah.
There was no chance in hell I was going to get on an airplane to see my real estate.
Yeah.
So for me, driving was everything. For the average person, though, I think it's important to learn the skill, the discipline where you can drive because it's expensive. I don't think you can learn out of state and learn the skill at the same time. It's just too many variables. So like, let's say you live in California and you want to invest in Cleveland and you know no one in Cleveland. I would tell you to learn the skill, which is buy box is just a skill. I would learn it in your backyard. That way, when you have it after 3, 4, 5 months, you can take that skill and then deploy it somewhere else. To me, Kelly, it's like a golf swing.
Yeah.
Most of us go to a driving range in our backyard to learn the skill to swing a club.
Yeah.
And then at some point, with focus, discipline, practice, maybe some coaching, you can take that golf swing anywhere you want.
Right.
Any state.
Yeah, that makes sense.
That's how I see it.
Okay, so I love that. And that makes total sense. That's why I wanted to dip back to that question because I wanted people to hear your answer on that. And I want to go back again to, what did you call it? Buy blocks?
Buy blocks.
That's like the criteria of what you fixated on that you were looking for. Now, that was what you were looking for initially for those first couple years. Are you still continuously looking for that, but in different markets, or has that shifted for you? Or is that the recommendation that you make for someone that's looking for their first property, but then it shifts as they're going? Like, walk me through the progression for someone sitting here today that's like on property 1 versus property 5 and so on and so forth.
So let me be very clear. A buy box is everything until you get your first rental. Because a lot of people in this game get distracted. Oh, I looked at my market for a week. Well, did you look at it for 70 weeks? I mean, it takes a while. This is not easy street. But at some point, you will have that buy box dialed in. I started to adjust my buy box after the 3rd year. I can now cover Fresno entirely because I've been doing it for 15 years.
Yeah.
But anytime you change markets, you got to start over.
Yeah.
Like if you don't know that, you're back to basics, if you will. You got to practice the swing. But the other
Mm-hmm.
thing in your question is at some point, and again, this happened in our story. If you read my book, One Rental at a Time, about 2006, if you guys remember, 2006, housing was screaming higher, screaming. And if you actually look at the stats, Fresno was the number one market 2 years in a row for appreciation. For example, 1818 Norris Drive East 93703, which was the first house we bought. We bought it for 107. It screamed to 265 like less than 3 years later, more than a double. That's not healthy. It wasn't affordable. So we sold them. And we did 1031 exchanges into apartments. We went from 8 homes, which is what we had after about 3 years, and we went to 80 units. Why? Because the houses didn't make financial sense. There were negative cash flow. I call it alligators. So, you got to be disciplined. You don't do alligators. You don't bet on appreciation. At some point, your buy box will get unprofitable and you need to move. But in the beginning, it's everything. You have to start super focused.
Yeah. Yeah. No, that makes sense. So you study the market, you talk to people in the market, really get to know what the trends are in that buy box for that, one particular framework that you're talking about. I'm assuming all of this is in the book. This is all in the
All
book.
in book.
Okay. One rental at a time. It's going to be in the show notes down below because we're not going to get a chance to cover everything here, but you guys can go order the book so you can hear the whole process and all of that. So let's talk about the good, the bad, and the ugly. So just really quickly, the good, the bad, and then the ugly of getting into this business.
The good in this, especially for entrepreneurs, is it works. Getting wealthy, the formula for getting wealthy is 100 years old. It's 200 years old. You get really, really good at what you do if you're an entrepreneur, selling what you sell. You then create disposable or investable capital. Then you buy assets that you can hold forever. The people that get burned out in this business, Kelly, have bad debt structures.
Yeah.
And we're about to see a lot of people lose because their commercial loans blow up or their bridge debt blows up and it's over. But if you have 30-year fixed rate debt on a boring single family home and you hold it for decades, you're going to be a millionaire.
Yeah.
And that asset will just sit there. So that's the good. The bad is being a landlord, you're dealing with the public and, people lie to you and people steal and people break stuff and, all of that.
Kind of like being an entrepreneur running a company.
Kind of like being an entrepreneur. Exactly.
Some of that sounds familiar for some reason. I don't know why. I don't know where the reference comes from. Okay.
But the beauty of being a landlord is I could pay someone to be the governor. It's called a property manager. And we have had a property manager, Kelly, since day one. We don't actively manage. We pay folks. And people would be shocked. Again, we are 20 years into this. We have procedures and all of that. We spend about 2 hours a month on our portfolio of, significant size. That's pretty passive.
Yeah.
But in the beginning, you're going to bump your knees and all of that.
Yeah.
And then good, bad, the ugly, it's harder than social media wants it to look at.
Yeah.
Real estate is always hard. If it was easy, everybody would do it.
Yeah.
It was hard in 06. It was hard in 12. It was hard in 20. It was hard in 24. People don't like hard. They want an easy button, especially if you have money and you lack time. You could be teased by these charlatans saying, I've got you. And it's just, you can't cut the line. That's the big thing I want entrepreneurs to know is you can't cut the line. Just like growing a business, you can't cut the line. You got to do the work.
Yeah.
I'm sorry,
100%.
but if you do it in a decade, you'll have a huge assets behind you and you'll have options, which is pretty powerful.
Yeah, absolutely. Now, I think one of the concerns that I always have thinking about moving from market to market is finding the people that you trust in markets where you're not going to be frequently, that you don't have eyes on, right? So what has your process been as you're moving from market to market to actually find trusted governor, let's call it, for the property, or even, as things go wrong in the house and you need to get things fixed, that, it's done the right way the first time. You're not being overcharged ridiculous numbers for it. Like, how do you develop a system for actually putting your support team together to prevent, risks or issues or, whatever the case?
Here's the honest truth is I have evaluated going to other markets dozens of times. And because of the risk of building a brand new team, I've decided my incremental effort is better used growing the market I am. I believe if you're an entrepreneur or high-end, W-2, you can build wealth in one market. I think there's a very hey, I want to chase markets. I want the hot market. I want to all of that, I
Yeah.
would tell you focus on one market. Again, this is supposed to be less risky,
Yeah.
semi-passive. Just double down on the market that you've
Yeah.
chosen. And to be clear, I've had to change assets, right? I started
Yeah.
with houses. Then I
Mm-hmm.
went to multifamily. Then I went
Mm-hmm.
to mixed use. Then I went back to houses, right?
Yeah. So you
Just
have to kind
because,
of,
yeah,
you have to read the market and know when it's time to like restructure your mix of business to match kind of where the dynamic of the market is going.
absolutely. I
Yeah.
I would much rather change asset type in my market with my team than keep the asset and go to a brand new market with no team.
See,
It's
I did not
just
even know that, but that was my top question. And that was the concern that I've always had. So I'm very glad that I asked the question because that's a very important distinction that you've put all the time and energy 3 years up front into vetting the market that you were going to go into. And then you've doubled down, really focused on going deep in that one market, but then adjusting your mix of business in the market to capitalize on where the actual opportunity for profits
correct.
is.
Yeah, I don't
Cool.
chase. I think a lot of people chase. They want to buy homes. They want to do this. They want to tell their friends, folks, we're trying to build wealth. This is supposed to be a part-time thing on the side for the
Yeah.
entrepreneurs. Stop adding risk. Double down,
Well,
get the team going.
yeah. And I mean, I think the bottom line of this is there's a lot of people out there teaching go big and go fast.
No.
And that includes enormous amounts of debt,
Mhm.
enormous amounts of risk, and chasing short term things that when something goes up really, really quickly, folks, we all know the pattern of gravity, right? It
Yeah.
is going to come back down. And I think what you're saying is slow and steady wins the race,
Yeah.
building wealth over time, carefully investing, and then going deep in what you're doing so that it does remain passive versus turning into like this beast that's out of
Yes.
control that you're ending up managing. You're speaking my language. It definitely makes sense to me. So, I mean, obviously, we don't have time to cover everything here today. I want everyone listening, if you've been thinking about real estate, which I know all of you are, that's why we
Mhm.
have Michael on the show today, go ahead and scroll down in the show notes and grab a copy of his book, One Rental at a Time. Maybe you could be following in his footsteps, going from your first rental to 200 plus units as you progress. And what would you say, just really quick as we wrap up here, Michael, what are the kind of buyer beware, like the top mistakes that you see over and over again with people that are just getting started in the business, that if someone had one takeaway because they're leaving the show today and they're like, yes,
Yep.
I am going to go do this, I'm going to go get my first place, what are those top 3 mistakes that you would say avoid these 3 things if you want to make it in this business?
You can't cut the line. Some of your viewers likely have significant capital they want to
Yeah.
deploy and they're in a rush. You can't cut the line. It takes 3 to 6 months to learn your buy box, learn you're in your area. That's
Yeah.
number one. Number two, don't do it alone. One of my rules is try to meet 2 new people a week in your market, right? Just keep growing your network.
Yeah.
If you meet 2 new people a week, that's 100 people a year. When you do that consistently, you'll go forward. And again, understand this is a 10-year journey. It's not a 100-meter race. This is a
Yeah.
marathon. And
I love
just
that.
understand that and you'll be okay.
I love that. I love that. Any other parting advice that you want to share before we wrap up here today, Michael?
I just want people to know that building wealth is possible. It is possible.
Yeah.
The strategies have been around for hundreds of years. Slow and steady, boring. It's not sexy on social media. That's why nobody talks about it,
Yeah.
but it does work.
It works. That's it. Well, thank you so much for coming on the show today. And obviously, we want to point everyone to the book so they can actually get the structure for everything. But where else can they or should they get in touch with you to learn more?
One of the few things I've done right in life, Kelly, is everything I do is one rental at a time, whether you're on Instagram, YouTube, website, it's all
Perfect.
one rental at a
I
time.
love it. Awesome. Well, thanks for coming on the show today. I think you really made a difference for a lot of people. Happy to have you here. Thanks, guys, for tuning in to the Kelly Roach Show, and we'll see you back here next week.